Welcome to Aloha Fridays.
Aloha Fridays.
Aloha. We even both have our Aloha shirts on,
I know, it's awesome.
which I did. I think we should just jump right in, man.
I'm excited. Let's do it.
I think, I guess, Nick, why don't you go ahead and introduce yourself? I'll do the same.
Cool. So if for those people who don't know me, my name's Skyler Stokes. I'm a financial planner and I've been in the business for roughly 6-7 years now. And I'm a family advisor. And I guess the long and the short of it is I help people with finding and putting in opportunity or finding opportunities for them to advance their either wealth accumulation or protect their wealth later in life. So that's really me in a nutshell.
Yeah.
What about you, dude? What do you do?
Hey, I'm your local realtor here, North County specialist. Most of my people on Facebook and social media probably know what I do, but just so everybody that's watching this understands, Skyler and I wanted to start a little meeting that we're going to start doing every Friday. It's called Aloha Fridays. We got our Aloha shirts. And part of that stems from your new business, which I think you should elaborate on a little bit, which is Aloha Wealth Partners.
Yeah.
And we had this conversation just at coffee the other day about, not only what you do, but what I think has been going on in the news lately, and then the markets and people fear selling or, panic selling, their stocks or whatever it is. I think what a lot of people probably want to know is, from a person that's dealing with it every day, what are you seeing as far as trends over the last 2 months, 2 weeks with the markets?
Sure. Okay. So first thing is, thanks for bringing up Aloha Wealth Partners. Yeah, I started a new firm at the beginning of March, basically right when the pandemic hit and COVID-19 kind of shut everything down. And the process was kind of already started, the opening of the firm and everything. And the idea behind it is really just to kind of help people who are so used to seeing like the financial planner, financial advisor in the news, or the local person that they know who continues to kind of call them and basically just try and Wall Street them to death. So my idea is kind of taking that, flipping it, and being like, if you want some help, we're here. We're happy to kind of point you in the right direction. And if you have any questions, reach out. And yeah, it's just much more kind of cruisy and laid back. That was the whole kind of genesis of going this route. So speaking to the markets, obviously I'm sure, as everyone has been aware of, the last couple of months has been an absolute roller coaster when it comes to, the stock market and what's been happening, even the bond market too. But essentially what happened is the stock market is an indicator of how the economy is doing, and it's forward thinking or forward looking. And so when people see COVID-19 happening around the world, it gets them scared. And so, because they think it could potentially come over here. And what happened is a lot of people ended up selling a lot of their portfolios, which really dropped the market down substantially to a point of, down over 30%. When that whole thing went down, a lot of the big financial firms that people are used to seeing, the Morgan Stanleys, the JP Morgans, all those sorts of things, they're called institutional financial firms. And when the whole thing started to go down, when we started to have the Corona crash, as I like to call it, a lot of those institutions were selling. And so the volume inside of the market was crazy. And then what happened is, a few weeks later, Dow came down 36% and ended up being to where at that point things kind of started to level off. The Federal Reserve came in and said, hey, we're gonna help, the economy by basically giving, the United States trillions of dollars. And so what that did is it made people feel really comfortable to a point of, okay, like we actually have some help now, let's jump back in. And so the last couple of weeks to months, there's been a declining amount of volume in the market, but the market's been going up. So it's been kind of like this weird juxtaposition where we had a lot of institutions initially selling, and now we're at this kind of lower level people who aren't necessarily involved with like the big financial firms. They started kind of getting out, and so now we're seeing decreased volume inside the market's going up, and so at some point it's probably going to flip again. So I think in the next couple of weeks to months, who knows how long it's going to be, but historically speaking, we end up having another test of those lows that we had back in March. So it's a really kind of hard market to play when we have, you know, the Federal Reserve giving us tons of money.
Right.
Unemployment is, you know, ridiculously high. Small businesses are shutting down. And so economically, we're not looking like we should be at our levels that we are right now in the stock market, but we are. So it's just, but again, like part of the whole kind of financial planning process is understanding that these sorts of ebbs and flows are going to happen. And so you just build portfolios around making sure that you're able to withstand and with, you know, just be able to weather some of these storms. Does that make sense?
Yeah. You know, one thought I had was, for example, if I have some first-time home buyers, you know, let's say for sake of this conversation, they're in their mid 30s, you know, they just bought their first home, you've got a little bit of money saved away, and what would you suggest at what time or at what point is the best time to meet with someone like yourself and start to get the ball rolling if they haven't already on whether it's a Roth or some other sort of retirement fund or plan? Like, what's a good time to meet? Because I think people in my age demographic, mid to late 30s, are either doing it already or they're starting to be like, okay, what's my next move? I own a house now and I've got some more money saved away and I'm making what I'm making a year. My wife's making what she's making. What's our next move to start saving or you know, accumulating wealth? I mean, at what point do you suggest meeting with you? And then what are the first, I guess, kind of steps for someone like that that you would suggest?
Good question, dude. You know, I think anytime that someone has anytime that there's someone who has an idea of, you know, like, am I doing all that I can do? Am I optimizing my financial situation? At that point, it could be, you know, worth someone's time to just kind of sit down and with a financial planner and see if there's some things that they could do to potentially like get them to reaching their goals, you know, quicker. So I would say that, you know, more often than not, the folks that tend to reach out are people who really want to know, like, am I really making the most of my situation? You
Okay.
know, I would say majority of the time people find that after going through some of the exercises that we do when we start doing financial planning is, oh, I could actually be saving like, you know, $500 over here if I decided to, you know, just switch a lever, you know, or turn this off, which means at the end of the year I've got $6,000 more dollars. You know, maybe that could be put towards, you know, the goal of buying a new house. Like maybe there's like some things
Right.
that I could be doing that money, you know, better allocating that money for. So I think anytime that again, someone has an idea of whether or not they're curious of if they're doing everything that they possibly can do. I mean, what's cool about financial planning is like, it's so objective. It's like, well, here's kind of what you want to do. Here's what you are doing. In order to get what you want to do, just make a couple changes and you can make it happen. Does that make sense?
Yeah. Another thing we talked about the other day that I know, like, for example, I was curious about, and I think other people will be curious about, are what else plays into that portfolio, if you will, whether it's a life insurance policy, a Roth. And I know that one thing we talked about was various types of insurance like life. How do you guys plug that into like a formula? I know you kind of talked about it saying, well, if it meets what these people are looking for, then you can plug that in for people,
Sure. Sure.
basically.
Yeah, for sure. It all kind of comes down to um, really like how much you have as far as liabilities in your life, whether they be fixed liabilities or kind of ongoing liabilities. So say, for example, like a mortgage. If someone has a mortgage at like $500,000, you'd probably want a life insurance policy, whether that be, term or whole life or whatever it is, to at least cover that plus the other things that they have going on, so that they don't leave their spouse or their family with, like riddled with debt. You know what I mean?
Right.
And it's really kind of more of plugging in calculations and seeing like how much is really like what you need. And then from that point, kind of working back into, okay, like how is this going to, go back into the financial plan? Like, are we taking care of everything that we need to take care of? Life insurance is definitely a piece of that. But yeah, I think for the most part, it's a matter of if someone has, a number of liabilities that they need to take care of, it is a good idea to at least start with life insurance, and then the other dollars that that you have on the side, potentially looking at either investing it or saving it for another goal.
Right. Okay.
Yeah.
Cool.
So I'm actually curious how your week went, Mr. Chad.
Oh,
What happened over there
Here we
on
go.
the Compass front? Yeah, tell me what happened.
Yeah, but for those who don't know, I guess I didn't really do a complete intro. Chad Voisin with Compass and Encinitas. I've been doing this full time since the beginning of 2014. We've seen a pretty healthy market, more or less since I've started in this business. We're not at the days of doing short sales or anything like that. Luckily, we haven't seen, I don't want to say we've seen too much change in the market. It's almost been business as usual, more or less, in the San Diego market. The inventory is still low. The interest rates are still low. They kind of fluctuated there for a couple of weeks in March, and then they jumped up, and then they jumped back down. I had somebody just get a refi done at 3.125, which is insane on a refi right now. The money's so cheap. So I think overall we're still in a pretty healthy market. I'm seeing multiple offers on a lot of the stuff in the median price point. The stuff between 500 and 800,000, for example. You're going to see multiple offers still, because the inventory is still low. The luxury stuff, from what I'm seeing on my end, is sitting a little longer. It's a little harder to move, but obviously, if you think about it, there's a smaller pool of people that can afford the more expensive properties, and there's a bigger pool of people that can afford the median price properties.
Sure.
People are always going to want to live here. San Diego isn't one of these places. There's an old saying, like a friend of mine said, yeah, you can buy a property in Detroit for 50 grand, but in 10 years, it'll still be worth 50 grand. Obviously, we know that the long-term play in Southern California is always going to be safe. And I tell all buyers the same thing. It's like, if you're going to buy a house and you're looking at making a ton of money in 2 years and then selling, it's probably not going to happen. You definitely don't want to bank on that. But if it's a long-term play for you and you're honestly looking, okay, we're going to stay in this house at least for 8 to 10 years, you're going to be good basically no matter what. And I kind of have that same conversation with people. So overall, it's been good. I've personally had an exciting week. Just put one of my luxury listings pending this morning. It was a long uphill battle. I kind of felt like, who Sisyphus is? That's the Greek god who had to roll the rock up the hill forever. That's what I felt like. Finally, I conquered that hill. So yeah, overall, it's pretty healthy. And I think what's going to happen is once the COVID-19 epidemic becomes more under control, we're already seeing businesses open and restaurants open and hair salons open, and everyone's going to be excited to go out and spend money again. And I think the market will come back even stronger. We've seen a little bit of a lull, but not much. And it's just going to come back stronger. And, I'd say 3, 4, 5 months from now, it's going to be a very, very healthy real estate market all the way around. So hopefully the interest rates stay low and people still have the confidence in buying and,
love it.
Keep that moving.
So let me ask you, like, through real estate, and even in my business too, like we always kind of run into things that we don't normally see, or like something that's new. Like, is there anything that kind of happened this week or last week that was new as far as deals or things that you've seen that have been different?
Not much personally. I think what's interesting is it's somewhat challenging to market homes in this market on the listing side. There's a lot of things you can't do right now. You can't have open houses. You can't even have printed material inside of your listing for people to take. When they come see the property, they have to sign what's called a PEAD form, a property entry declaration, saying that they don't have any symptoms. So it's made our jobs a little more difficult. I think we're going to see those restrictions become eased, I hope. We're not even going into the office. Like, our office is closed. So it's a little, I guess it's a little trickier to get listings sold with all the restrictions amidst the pandemic. But, hopefully an immediate change that I hope to see is, once they get a control, is to kind of lift some of those restrictions so we can do the things we do to market homes. Whether it's an open house or sending out, stuff on people's doorsteps, letting them know that we have a listing in their neighborhood, broker opens, sundowners, all that kind of cool stuff that we like to do to expose the home we can't do. Mm-hmm. So I'm just hoping that we see those get lifted and that, we can properly market people's home. Again, stuff is moving, stuff is selling, so we're working with it, but that's the biggest thing that I think we're going to hopefully see in the next month.
Yeah, that's actually really interesting because, I'm a total data nerd, and I love kind of looking and seeing what's happening with regard to how was new housing starts this year or this last month, what kind of sales happened in the last couple of months, regarding real estate. And through COVID, something that I was noticing is, back in February, we had something like 5.75 million homes that were sold. And now through this whole thing, we're down to 4.33 million.
Right. Nationwide.
Yeah. So to your point though, that's kind of, I want to say it's necessarily something that we see here in our market, but it's definitely making things harder to sell homes.
Sure, and we are seeing some of it here, but we're definitely not as impacted as a lot of other areas of the country. Thank God.
Right.
Like I said, San Diego is one of those places that people are always going to want to live.
Yeah.
It's always going to be a dream destination for a lot of people to own a home here.
Yeah.
So we are fortunate as far as the real estate market is concerned in San Diego. Other areas of the country, not so much. But
yeah,
we're blessed. So
yeah, for sure. Have you heard any other agents talking about things that are frustrating to them, or is it kind of the same story?
Yeah. I mean, I feel like there's no rhyme or reason right now. We're seeing a couple agents I've talked to this week have these beautiful listings and they're not getting any showings. I mean, none.
Right.
One of mine in particular has had less than I was expecting, but we're still getting showings. And sometimes you get, 6 phone calls the first day and multiple offers in the first week. And even if you believe your other ones are priced right, still sometimes it just doesn't happen.
Right.
I think in a normal market that the kind of ups and downs of that are a little more even. And now, I get phone calls from friends that are like, yeah, I've had this listing on a month and I haven't had one phone call. It's weird. And that's never a good thing.
Right.
When you have a listing on and nobody's coming to see it, even though you priced it right, even though you presented it correctly, even though you've done all the marketing you can possibly do.
Yeah.
The barometer of if you're going to sell it in a normal time frame is usually how many people are coming to see it.
Sure.
And so when you're not getting showings, it's scary. And I've definitely had some of those phone calls and those conversations. Again, I think that kind of stuff will pick up once the restrictions are kind of, eased,
mm-hmm.
and people they feel comfortable going out and looking at real estate. For the most part, people still need to move. They still need to buy. They still need to sell. So, stuff has been moving, but yeah, there are those random ones for no reason. We just don't understand exactly what's going on when you feel like you're doing everything right.
Yeah. Especially during the summer months too, right? Because there's going to be so much more traffic, regardless of.
Yeah. And here we come, we're at, beginning of June.
Yeah. So
you would think usually, April, May, June, July is pretty busy. And then once kids go back to school, August usually slows down. So it'll be interesting to see what the rest of the year does.
Yeah.
Here in San Diego. If the school year will still dictate that as it usually does historically or not. And to see what happens with COVID-19 and not to mention, all the other stuff that's going on in the news and riots and stuff like that.
Yeah, yeah,
There's a lot going on right now.
yeah.
So it's an interesting time for everything.
What do we think? What do we think is going to happen with respect to like prices and growth of the real estate, like percentage wise? Do we think that we're going to see growth in the cost of real estate, or do you think we're probably just going to kind of stay where we're at, which is what,
I
five,
think
six?
you're going to still see your growth, especially here in Southern California. I think it may be a little slower this year and maybe into next year. You say maybe typically you see between 4% and 8% annually,
Mm-hmm.
depending on neighborhood, depending on location, a couple of other things. You may see that cut in half.
Mm-hmm.
That's what I would say based on what I've seen. But like I said, it's a longer term play. Just sort of like people that come to you and buy stocks and it dips down and they sell all their Amazon stock because they're freaked out. Well, it's already back up to what it was. Almost. What are we at? Would you say about a 10% decrease for the year in total?
What's really crazy is like, so there's individual stocks that have been doing really well through this whole kind of coronavirus thing, and people see today the market in particular. Last time I checked, it was up like 950 points. The Nasdaq is almost at all-time highs, which is just another index. Is that Willie in the background?
Oh yeah, can you hear him?
Yeah. He's like, yeah.
He's here.
He's like, sell.
Yeah. Keep talking. Let me see if I can
grab him, huh? Awesome.
Yeah, he was making his presence known.
Oh, for sure.
But anyways,
no, it's interesting. So the top 10 holdings in the S&P 500 make up 27% of the entire 500 companies as far as the index is concerned.
Okay.
That's huge, man. Like it's a market weighted or cap weighted index, meaning like if there's more, if one company is worth more, it's going to have a higher weighting in the index. So like for instance, Apple, Microsoft, Amazon, all those companies are just, very, very large and they've got tons of money.
Right.
And so that all the way down to Procter and Gamble and Procter and Gamble and some of the other companies. Anyway, 27% of the market is in those 10 companies, or the index in those 10 companies. So as they grow, or as they kind of, because they're technology based, it's going to drive the index up, which is why the market looks so good right now, right? It's like there's like a carrot in front of people saying like, hey,
so do you feel like it's sort of a optical illusion then at the
market? Yeah, because
as it looks like it's doing.
It's there's other sectors of the market that are still down substantially. Like small cap companies are down still 15-20% for the year. Industrial companies, 10-15%. There's still like a lot of companies that are still in the red. Mm-hmm. As I was kind of mentioning before too, the Nasdaq is representative of those 10 stocks. 50% of the Nasdaq is in those 10 stocks. So there's still like, it looks really good, but in reality, I think that it's very tech based, which makes it look good. But at the end of the day, there's still some underlying fundamentals that we have to make sure if we're going to start investing in the index like that, don't expect, don't expect it to continue to go up, because it's not a representation of our economy. We're still
not an actual representation.
Yeah, we still have quite a, I think we still have quite a ways to go when it comes to seeing like what actually happened and the results of shutting the economy down for as long as we did. It was only 2 months, but GDP is down 5% for the year so far. And that's, reflective of end of, I think it was April. So there's still like a lot of data that still needs to come out. And I think that we have a little bit of, again, ways to go before I would say it's, I would give it the green light. So, yeah.
Cool. Well, I think let's wrap it up.
Yeah.
If anybody's watching this and you guys have questions that you want us to take on next Friday, we're going to do this every Friday. It's called Aloha Fridays. The whole idea is just the Aloha vibe with the approach to business, and I think that's
Yeah.
what Skyler's doing, right?
Yeah.
I mean,
Yep.
that's the whole
Exactly.
behind your company.
Yep.
And kind of moving forward with that vibe with business, which people seem to like. Nobody wants a pushy salesman, especially when it comes to their money.
Yeah.
So if you guys have any questions for next Friday that you want us to talk on, whether it's the real estate market here, San Diego, what's coming, what's going, if you have anything for Skyler from everything he does, which is
Yeah.
a lot, feel free to write it down, and we'll address it next Friday, and we'll keep that ball rolling every week.
Yeah.
Anything you want to add to that?
No, I think kind of you wrapped it up pretty well. That again, like the whole idea is just to kind of help give people information in a way that isn't pushy or salesy, and we're just here to help, like just kind of point people in the right direction and give them information and arm them with just stuff that they can take and potentially make their lives better. So that's really kind of the whole genesis of everything. So yeah, man, that's pretty much it.
Nice meeting with you today, man. And thanks for watching. Anybody who's watching, aloha.
Aloha. Next time.